Well, in today's business report, in less than 2 hours, the U.S. Federal Reserve will announce its decision on whether or not to raise interest rates. How will the decision impact Africa, and what global markets are watching as the U.S. national elections is in their home stretch? Well, joining us from New York with all the answers is Africa 54's business correspondent Jill Malandrino. Hello, Jill.
Hello, Vincent. So while traders do not expect a rate hike out of this meeting, the odds are quite high that we will see one in December. Even though thousands of miles separate the U.S. from Africa, this is why it matters for the continent. Historically, rising interest rates have gone hand in hand with an appreciating U.S. dollar, and the exchange rate between developing nations and the U.S. tends to widen. As a result, dollar-denominated debt owed by developing nations increases and becomes unmanageable. That said, we're only looking at a 25 basis point hike, and we are still in a sub 1% interest rate environment.
Now, arguably, the outcome of this national election will impact global markets the most, right?
Oh, yeah, this has been an election for history, to say the least. An increase in stock market volatility of and immediately following the election is starting to play out now following Friday's surprise with the FBI reopening its investigation into Hillary Clinton's email. The S&P 500 dropped about 0.5% to ultimately recover most losses by the market close. I think that's the type of reaction we will see next week in terms of short-term impact, just like we saw in June with Brexit. Regardless of the outcome, several analysts do not expect a major election-related long-term market disruption for several reasons. Most notably, the stock market historically has performed well around elections as policy uncertainty is resolved.
Now, Jill, you just mentioned that, mentioned policy uncertainty will be removed, but we know that the candidates have not spent much time, in fact, addressing the issue. So why do you think that markets will take this in stride?
That's an excellent question. Campaign rhetoric is mainly just that. It's rhetoric. LPL Financial made some good arguments regarding this point. Priorities for the candidates do not necessarily match the amount of time that they spend discussing various issues on the campaign trail. We have a system of checks and balances in the U.S. For example, Donald Trump will not immediately slap tariffs on imported goods and start a trade war. Hillary Clinton will not break up big banks, even if she could do it unilaterally. So at the end of the day, corporate America is very adaptable. Over the past 80 years, many disruptive policies have come and gone, as have recessions, periods of high inflation, interest rate spikes, Federal Reserve rate hike cycles, wars, terrorist attacks, etc. Through it all, S&P 500 companies have grown profits by an average of 8% annually. So you can see that the markets ride this out sort of on their own stride.
Well, Jill, obviously we'll be looking at what happens on the 8th and 9th in the markets across the world. Thank you very much for your reporting, Jill.